Welcome to episode 3 of the Array Archive series. In this episode, we're going to be going over the mitigation block, one of the strongest and one of my favorite PD arrays due to its strength and its significance when it comes to price. Its formation, think of it as if price is clearly going higher. When I say clearly, I mean it's going higher. It's in an uptrend. Price is in a buy program. It's in an uptrend. It's going higher, okay? Whenever price creates I guess you can say a minor retracement within that, delivery higher, what'll happen is the dumb money will tend to sell that retracement. For example, if price was going higher, like this uptrend here, this little miniature uptrend. If this little retracement kicked in right here, see that little retracement? What'll happen is the dumb money will try to sell this retracement because it's like, that's money. Price is dumping. Oh yeah, let's sell this. What's gonna happen is when they sell that retracement, right? Price is gonna come up, right? Take out buy side. Now, actually, one thing. Do you remember what rests above buy side liquidity? Two things. Okay, two things. Sell stops and stop losses for shorts. That is what rests above buy side liquidity. So this level here, wish I can put a line right here, in which I can. So above this level right here would be buy side liquidity. So what price is going to do, since when they sell this, they're going to place their stop right above that high. Why? Because that is the most recent high before, the retracement even occurs. So price dumps is like, oh yeah, we're up, we're making a whole bunch of money. Oh, price reverses. Psych, I was just kidding. Yeah, we're going higher, the algorithm says. And then price side liquidity is taken, and then boom, their entire short is gone. Now what'll happen, this is what's gonna happen. Price will come and revisit that same level of buy side liquidity to mitigate those orders and reaccumulate them back into the market. Okay. Because yeah, it purged it, but it's gonna come back down, reaccumulate at that level, so it can then, I guess you can say, re-inject those orders or all the funds that was here, all the positions that was resting here, in which those positions consist of the dumb money that was selling here. So it, like I said, it'll come back down, reaccumulate, and re-inject all the accumulated orders that were left here after it purged it, to then cause what? More delivery, faster price. It just makes the market more energetic. And that's why we call this one of the strongest PD arrays. What also happens is when price tries to retrace one more time, guess what? The dumb money is going to sell again. When it retraces back into that level there of their old stop loss, they're going to try to sell again. Why? Because it's another retracement. And guess what? It's the pattern is going to keep going. Price is going to go back up. Boom, their stop loss is right there. Price is going to retrace back into the area of stop losses, or basically the old level of buy side liquidity. Reaccumulate those orders, as we can see which happens here. Price accumulates back and forth for I think an entire day with the price action here. Yeah, it consolidates for an entire day, and then the next day we see a gigantic boom. Remember I taught you about the explosive foresight, how smaller candles make bigger bodies? Smaller bodies make bigger bodies. Let me zoom in. See that? Small body, gigantic body. See that? But mind you, when we come back down, or when we accumulate, where are we accumulating at? The old level of stops, or the old level of buy side liquidity. Whoa, pretty nice, isn't it? Now, that's just the anatomy of how the mitigation block actually forms, like what actually goes on behind the scenes. That's just a little explanation. But the actual candlestick formation and how you will find the level of the mitigation block, it's not that hard at all. So we're going to use this uptrend for an example here. So like I said, the mitigation block forms whenever price is already delivering a certain narrative. It can be bullish, bearish, sideways, does not matter. Well, no, not sideways. I'm just kidding, not sideways. But it can be buy side or it can be sell side delivery. Does not matter. Price just has to be going up or down. It has to do that. So, for example, since we're going up here, what we want to look for is a retracement lower. That's what forms the mitigation block. Now, when we have this retracement lower, or that, I guess you can say, intermediate term shift in delivery before continuing higher, the mitigation block, right, is the deepest up close candle before the retracement. The deepest up close candle before the retracement. Okay? Now, this is what I mean by that. When I say before the retracement, I mean before the most recent swing before the retracement. Okay, so you see how this is the most recent swing before price retraces? I mean anything before this swing, or as the swing. What I also mean by as the swing is the deepest close candle could be the candle that creates the swing. So it can be this swing, in which it actually is. So when we say deepest close, the deepest up close candle, that means it's a bullish candle with the deepest close before price reverses. So we have a close here. This one's higher. We got a deeper close, a deeper close, a deeper close. We got a deeper close, a deeper close, and another deeper close. But this is the final deepest close before price reverses. So what is the deepest close? This right here, as the actual swing. So the close of that candle would be the what? The mitigation block. And if we look, price hits the mitigation block. Let me pull this over. Hits the mitigation block and then explodes higher. And guess what? When I look again, here's another mitigation block. Like I said, this process repeats. It keeps going forever until price is ready to shift. It just keeps going forever. So price retraces, deepest up close before or as before the swing, before the retracement, or as a retracement. I can't really explain it, but you get what I mean. So here's the deepest close right here. Boom. You see that? See how price is accumulating right at that level? Yeah, it's re-injecting all the buy side liquidity that was here back into the market. And guess what that's called? Liquidity injection. No duh, right? It's a no-brainer. So it's going to re-inject that liquidity back into the market, causing the next move to be very explosive, in which it's very explosive, as we can see, right? So deepest up close candle before the retracement. When I say before the retracement, I mean before the most recent swing before the retracement, okay? In which this is the most recent swing before the retracement. Or, yeah, it literally is. It's the most recent swing before price shoots lower. So, as the swing, the mitigation block can be the deepest up close candle as the swing candle. And what I mean by that is, if this candle was bullish, right, and it created the most recent swing, and it was a deeper close than this one, like this, the bullish candle's body was higher than this one, then this candle here, if it was bullish, this candle here would be the mitigation block. But since it's not, and this is the deepest up close candle before the swing, this would be your mitigation block. So you draw that out, and boom, there's a mitigation block. Want to keep going? Sure, let's keep going. Let's keep going. So here's another one. You got the retracement here. Here's that swing right before the retracement. Anything as that, the deepest up close candle as the candle that creates the swing, or anything before it, is a mitigation block. As you can clearly see, the swing is not a bullish candle, so right off the bat, it's not a mitigation block. The deepest, The deepest up close would be this before the swing. As you can see, price pops up, comes back down. Now, I'm going to show you what are the specifics when it comes to mitigation blocks being disrespected and respected. Now we're going to go over the first one. First one that we marked right here. There's two forms of a mitigation block. One where it creates a massive retracement lower. And then there's this one here, whenever price does not make a crazy swing lower. So, this is our mitigation block, right? You see that? That's our mitigation block. You see how price swings lower and creates this swing low down here? The disrespect of the mitigation block is when price breaks this swing. That swing right there would be the disrespect of the mitigation block. The mitigation block is now gone, okay? But let's go to this one. This is a mitigation block 2 right here. See this? This is mitigation block 2. Want to know how? Price is heading higher. It stops. It makes a miniature retracement, creates a swing. The deepest up close as or before the swing is what? This. It's as the swing. So this would be, I'm going to pull it this way. So this would be the mitigation block right there. Well, can I move that to the left side? Yeah, there we go, the left side. So this would be the mitigation block. The disrespect, if price does not create a swing, breaking the, let me try to explain this in a very simple way. But if price does not create a swing, like how this one did it, is if it really didn't come down and create an entire swing lower, in breaking the deepest candle's low, which it did here. What I mean by that, right, is you see how this is the deepest up close candle, right? Let me get a line. This is the deepest up close candle, right? This entire candle right here. We broke the candle's low by creating an entire swing lower. If price doesn't do that, the disrespect point would instead be the low of the candle. Why? Because when a mitigation block was created, we didn't have that gigantic swing lower. It was just a miniature stop in price. Price just stopped for a minute. It retraced. It was like, okay, give me a little break, then we're going to keep going. That's all this was. This is like, oh no, we gotta retrace a little bit. This is like, okay, I'm tired. It's like, okay, I'm done. I gotta wait a minute. I can't do this no more. But this type of mitigation block is like, just give me a little minute. Let me get a sip of water and I'll be done. That's basically what this is. So what will instead disrespect this mitigation block, or what would cause this mitigation block to be disrespected, is the low of the actual up close candle, which is this right here. So we'll mark that as expected disrespect. So if price breaks that low, the mitigation block is over with. If you entered off this mitigation block, you should then get out your trade. Real simple, isn't it? Yeah, very simple, very simple. We're going to go over a couple more examples of this. This video is already 10 minutes long, so I'm not going to make this too long. So let's see here. And also, let me mention one thing. What activates the mitigation block is when it comes back above that the swing. When it comes back above the swing, or if it was a bearish example, come back below the swing, that's what activates the mitigation block, in which price will then have to come back down into the mitigation block to actually use it. And once price delivers away from it, as you know, when it comes to array exhaustion, the array will be exhausted, so price cannot use it anymore. So what I mean by that is, I'm going to explain this real quick, and we're going to go to some other PD array examples or mitigation block examples. Price comes down, boom, we got this most recent swing. When price comes back above that swing, the mitigation block is activated. Now, what is the mitigation block? This right here. That's the mitigation block. That's it right there. Because you're probably like, okay, but on this candle, and went above the mitigation block, came back down and shot higher. That's not you. If you're even thinking of entering here or looking at that as a confluence, it's not real. That you're looking at a ghost. That confluence doesn't exist. The algorithm does not refer to it. When the PD array is truly created, or when it's truly activated, or when the algorithm is paying attention to it, is when it comes above that swing right there. See that? It has to come above that swing and then revisit the deepest up close candle before or as a swing, which will cause the touch of a mitigation block. Whoa, pretty cool, isn't it? Yeah, I know. Anyway, about two more, then I think I'll end this here. I want to make it too long. Here we go. We got one right here. Price is clearly heading high. I want to show a bearish example because I've been showing you a lot of bullish examples. I need to work both sides of the brain. So here we go. We got that retracement. Here's the latest swing before it. As you can see, the deepest up close candle is actually the swing itself. We draw that out. Guess what? Price breaks above the swing. Next candle comes back, revisits the mitigation block, and then guess what? It delivers higher. And it delivers what? Aggressively. Oh, pretty cool, isn't it? Yeah, I know. Anyway, let's find a bearish example before I end this video off. I've already made this video way too long. Can I even find one? Is there one around here anywhere? Oh, yeah, there is one. Yep, yeah, there is. Here we go. Okay, now it's literally the same thing as a bullish example, but completely reversed. Okay, price is going down. You want to find the deepest down close candle before or as the swing. Okay, so as you can see here, price is dropping down. Boom, it creates a swing. Retraces. Guess what? You need to find the deepest down close candle before or as the swing. Is the candle that creates the swing a bearish candle? Nope. So we need to look before the actual swing. The deepest closed candle would be this one right here. Boom, there's a mitigation block. A bearish mitigation block in this case. Guess what? Price comes back, breaks below that low right there. That activates the mitigation block. Guess what? Price reaches back up into the mitigation block, reaccumulates those orders, and then guess what happens next? Pretty cool, isn't it? Yeah, I know. And then guess what? It keeps going. You want to see how large this move was? This is life-changing money. Whoa, 700 points. Is that real? Yeah, it is real. One of the strongest PD arrays. And I'm teaching you this first. Isn't this pretty cool? Yeah, pretty cool, isn't it? And then the disrespect of the actual candle, it would not be this swing here. It would not be the retracement swing. It wouldn't be that right there. It would instead be the deepest closed candles high. See that right there? That would be the disrespect of the mitigation block. Why? Because I told you, when we create that retracement, or if we really want to create that swing up here, and we would use that as a disrespect, it has to come back and break the other side of the down close candle. Okay, in which this is the down close candle. See this? This is the down close candle, right? You see how its high is all the way up here? This is for a bearish example. You would need to see When it retraces, you need to see its high broken from the retracement, which will cause the deepest swing before price continues lower from the retracement, the disrespect level or the expected level of disrespect for the mitigation block. But since price did not reach up here, then this is a disrespect of the mitigation block whenever price breaks that swing up there. Pretty cool, isn't it? I know. It's very, very, very strong PD raise. We can clearly see we just got beefy candles all throughout price. It's just straight beefy, just beefy. See that? Yeah, I know. Anyway, we have another mitigation block right here. I'm going to make this real simple. Price is heading lower, going down. We retrace. We got the deepest down close candle as the actual candle that creates the swing itself. So we want to mark the deepest close of that, which will be right there. Boom, there's the mitigation block. We come back up, accumulate for a little bit, and then we make a little continuation lower. My bad, I said continuous. A little continuation lower, delivering about, how much is this? Wow, 200 points, really? 250. No, 300. Wow, just about that mini mitigation block. Wow, that's crazy. And then since the retracement higher broke the candle that we're referring to, or the deepest down close candle's high, then the deepest swing after that retracement would be the expected disrespect level of the what? The mitigation block. It'll be the level that would cause the mitigation block to be violated. Anyway, this is the end of this episode. Hope I taught you this well. I hope this can aid you when it comes to these rigged markets and source stuff like that. Anyway, I talk too much. I really do talk too much. This is a 17-minute video. I'll see you guys in the next episode. Good luck and good trading.